Spotlight goes on RentStrike. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Now I want to talk to you about an article that my wife has sent me. Don't worry, got my stein here. About, well, let's just say one of her favorite shops. If any of you gentlemen are dating or married to a girl that is into sewing or crafting, you'll appreciate what it's like when they go binging in Spotlight and having just rolls of fabric everywhere. So Rachel's on a material ban until she uses up all the stuff she's bought. But, that doesn't stop her from following the latest in Spotlight news. Now, what's quite interesting is that they have they're halting their April rent, and they're demanding a 50% cut. So they're on a rent strike. Now, what I thought we'd have a look at, just how this is affecting parts of the market, we'll look at the Vanguard Australian Property Securities ETF, VAP on the market. Now, you can see some of the businesses that are in this ETF: Goodman Group, Dexus, Centre Group, Mirvac, GPD, Stockland. So, Shopping Centre, Australasian Property Group, Charter Hall Group. So a good mix of businesses that are listed that are exposed to the property sector. We can see here, we'll just jump up on TradingView. Well, Feb they were at what? $97, and now they're down to $62. So it looks like a bit of a third of a fall. The technicals are neutral at the moment. They're neutral. And well, there you go. So the share market has definitely responded or anticipates the decline in value of this sector. And I can't say I'm surprised with everyone from Hungry Jack's now to Spotlight. Every big business is jumping at this. Is it just the businesses trying to get the best deal they can and take advantage of the situation? Or is it the retail sector that was already on its last legs struggling? We've seen how many businesses in retail get into trouble this year. The beginning of the year, it felt like I was doing an episode every other day, just focusing on another example of the retail recession. So let's have a look at this. Rich Lister-backed Spotlight Group has joined the growing ranks of retail giants insisting on massive rent reductions amid a growing backlash from landlords whose income has taken a pounding. Owned by Zach Fred, Morad Frade and family, worth a collective $1.6 billion, the Spotlight Group operates fabric and craft chain Spotlight, Outdoor Adventure Outlets, Anaconda, and Mountain Design, and is on the cusp of paying $50 million for failed department chain Harris Scarfe. However, it has not paid rent in April, writing to landlords of its intention to pay only 50% of gross occupancy costs, including but not limited to rent and outgoings for the months of May, June, and July. Now, how do you feel about that, everyone? This business has other assets, it's got money, they've got a contract with their landlords, but these are extenuating once-in-a-lifetime circumstances. Could they make a valid argument that there are conditions beyond their control, like an act of nature? Perhaps. It'll be interesting to see what happens in the courts in the coming years. Should landlords agree to its new terms and conditions, Spotlight writes that, as a sign of good faith, within 4 business days of receiving your signed confirmation, we will attend to payment of 50% of the April rent, with payments for the months of May, June, and July to occur on the first Friday of each month thereafter. So they're playing hardball. The group, which turns over billions in sales each year and owns a huge property portfolio, joins Chemist Warehouse, Priceline, Super Retail Group, and Hungry Jack's, that have all written to their landlords proposing big rent reductions despite enjoying solid turnover in some cases, benefiting from the changing retail landscape. There you go. As with other retailers, Spotlight provides no turnover figures to support its rent relief request, but says it has suffered government-enforced store network closures in Tasmania, New Zealand, Singapore, and Malaysia. Not all of Spotlight Group's retail brands, Spotlight, Anaconda, Harris Scarf, and Mountain Designs, or categories have been impacted equally. However, we have one balance sheet, and the aggregate fall in revenue caused by store closures and exacerbated by general retail malaise has been nothing less than startling, wrote Spotlight Group's Holdings Managing Director, Avi Gilabona, in a letter dated April 21. Avi Gilboa. So, just think about this, guys. We're seeing the impact of the retail market. Does this, with growing RentStrike in the commercial property sector, has that been reflected yet in that part of it, in the property market? We'll have to wait and see. So it's a difficult situation. Warren Ebert, Managing Director of Sentinel Property Group, which has over 500 tenants, including Spotlight and Super Retail Group, said landlords understood retailers were in a difficult situation and were keen to negotiate in good faith. Rents are negotiated in relation to a specific tenancy and turnover of that store. If retailers want rent relief because they have closed stores in other regions, then all leases should be negotiated based on the group's profitability, he said. Exactly, that's a very good point. They want to have their cake and eat it too. I honestly think a lot of these businesses, they're taking advantage of the situation to try and get a better deal, which, it's business. He singled out auto parts retailer Repco as one group that was doing the right thing. They're happy to sit down and discuss new rental arrangements that suited both them and the landlords, he said. In a LinkedIn post, former Queensland Premier Campbell Newman, now the chairman of commercial property investment group Araucana Capital, hit out at the unconscionable conduct of some ASX-listed retailers which had refused to honour the terms of their leases and pay their rent. Yes, Newman makes a good point there. They've signed a deal, and they're just unilaterally declaring, I'm on rent strike. They've got assets. They should have liquidity to deal with things like this. Many landlords have received take it or leave it letters proposing significant rent concessions or outright rent waivers. Landlords are reporting that they have been threatened and pressured to accept, Mr. Newman said. At the same time, many of these companies have actually seen improving sales and turnover. Well, there you go. And New South Wales, they're allowing the rent strike, guys, or the leave the door open for large businesses to demand rent relief. The ambiguous wording of New South Wales legislation on commercial rent relief could have the unintended consequences of exposing landlords to large claims from major retail tenants, senior lawyers warn. Now here's the thing, guys, you've got to remember all this government intervention, all these little tweaking rules here to protect everyone, to make it good, to slowly push us towards, a state-planned economy. Maybe I'm being a bit facetious there or hyperbolic. Nevertheless, you've got to understand all of these things pose an element of sovereign risk. So if you're a foreign company looking to invest in a shopping center or property or build a new project here, these things weigh on you. They need to be considered. And that's even before we look at the implications it's having on the market, on all the investments that people have, and just on the super funds. Remember, that's forced saving. Forced portion of your money that's being handed over to these big funds, some of them union-controlled. So, the legislation follows from the federal government's announcement this month that a mandatory code of conduct for commercial leases would allow smaller and medium-sized tenants to seek rent relief proportionate to their lost earnings. But I see, this is great, that'd be, I would have loved that when I lost, a year's worth of work because a client's project got canned. That would have been great if I could have gotten rent relief. No risk in running a business. It's all subtle interventions. I really am concerned that we're going to have a civilization that's so risk averse and so scared of going through hard times they're just going to try and prop us up till the end of the world. And then what happens? But loose wording in New South Wales law arguably expands the definition of those tenants affected beyond small and medium businesses with a turnover of less than 50 million and a 30% reduction in turnover as the federal code intended. The argument hinges on the use of impacted lessees in some sections of the New South Wales law, while a much broader reference to a party of a commercial lease is used elsewhere. Pauline Tan, partner and practice group head, Australian Real Estate, a top-tier firm in Ashurst, said the draft of the regulation left the door open for large tenants to be able to argue for rent relief from landlords. Okay, here's the thing. It's kind of irrelevant. Because, sure, they've left the door open there for it, and the courts will decide. But they're just demanding it anyway. They're just demanding it anyway. So what do you think, everyone? Do you think we'll see more impacts in this sector on the market? Do you think it's fair that these businesses and groups are able to do that? Once again, let me know your thoughts and opinions in the comments below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or on Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can send us gold via Gold Pass from the Perth Mint. You can buy our merch from HeiseSays, or you can support us via PayPal. Thanks, everyone. Have a great day. And watch out for the rent strike. Take care.